Right, let's look at accrued incomes, which is when we have actually provided a service or a product, or we may even have left our money in the bank or in an investment somewhere. So we've done something to or for another entity, and we have not yet received what we've actually deserved. So we may have left our money in the bank, and because we left our money there and allowed the bank to use our money to earn interests and invest in all kind of financial instruments, so we gave them that privilege, we've actually earned or deserved some income. But now it often happens that we have not yet received that income in cash, and then we're going to have an accrued income adjustment. So this is when we've earned or deserved. The word we can use is deserve. If somehow we have deserved to have actually received that income, but we have not yet received it, but we have deserved it, then we're going to have an accrued income adjustment. When we've earned or deserved an income, but not yet received. So let's look at the example, and then we're going to do the ledger and the post-adjustment trial balance. Our question says, question number 1, commission income relates to marketing done on behalf of another another entity. So we've done some marketing, we're going to promote some products or services on behalf of someone else, and because we as Redbus have done that, we've earned commission income of 1,230 Rand. This has been earned, but it's not yet been received. So earned but not received. So this is an accrued income adjustment. Just to show you how the picture looks, our financial year is ending on the 30th of June. So let's draw our financial year. Here we go. There it is. And we've got 1 July 2012 to 30 June 2013. And the current picture is as follows. For commission income, we have received 13,530. So our current picture is 13,530. That's the current picture. And that is the rent that we've received. Not the rent, sorry, the commission. Commission received. That's the actual cash effect. That's the current picture. Now we don't know how many months that was for, but what we do know is it does not include this last month commission income, because it says, well, we actually don't know which month it relates to, but we know that there is 1,230 Rand missing in this current picture, because we've earned 1,230 Rand, but we've not yet received it as our question stipulated. So our adjustment is going to be 1,230. The adjustment has basically been given to us, and if we add the adjustment to our current picture, we will actually get to the true picture. So my true picture is then going to be, so we're going a little bit backwards here. Our true picture is then going to be the 13,530 plus the 1,230, and that is going to give me, do that in your head, that's going to give me 14,760. Right, so that's the true picture. We don't actually know how the timeline looks here because they haven't given us much in terms of dates. But we do know the current picture says we've earned commission income of 13,530. We know that the information tells us in the additional information that 1230 has been earned but not yet received. So we had to make that adjustment. The current picture plus the adjustment gave us a true picture of 14,760. So we can record this in our commission income account. So we start off with our opening total on commission income from our pre-adjustment trial balance, that is 13,530. Put that in. And then we've got an adjustment here of 1,230 that has been earned but not yet received. So we've actually deserved this already, so my incomes should increase with the 1230. And because I've deserved it, but I have not yet received it, somebody owes me money. So when somebody owes me money, we normally call that debtors, but in this case, we're going to call it accrued incomes. So in the same way we had accrued expenses, where we owed water and electricity to the municipality, now in the same way we're going to have accrued incomes, when we've earned the income, in this case the commission income, we've earned it because we've done marketing on behalf of another entity. We've earned it, we've done the services necessary, but we just have not yet received it. So that's going to be similar to a debtor, which is an asset. It increases on the debit side. We can put our 1230 there. So in my post-adjustment trial balance, accrued income is going to be a debit of 1230, and my commission income is going to be the 13,530 plus the 1230, which we calculated at 14,760. And that is accounting for accrued incomes. Fantastic. Maybe just a quick recap of before adjustment accounts. At this point, we can say the first one that we looked at was prepaid expenses, and let's just write that prepaid, and we're going to have, so just a couple of columns here. Let's draw for ourselves. There we go. This is enough space, and we can say here at the top, this is what we've already done, and this is what we've not yet done. When I talk about we, I refer to the business, and then this is the adjustment necessary. Good. So with prepaid expenses, we've already paid, okay, but we've not yet incurred the expense. Remember, another word for incurring the expense is we've not yet used or consumed the expense, and therefore the adjustment that we need to make is for this portion that we've already paid but we've actually not yet used the service. The example that we looked at was insurance policy premiums. We've paid the premium but we've not yet used it, therefore the other entity, we can write here, other entity owes the business services or products. Good. So we can maybe just write it slightly shorter. So we can say that services or products are owed to the entity in question. So services or products are owed to the entity in question. That was for prepaid expenses. Then we looked at incomes received in advance. Just do it in a different color. Incomes received in advance. Now here we had a similar thing. We'd already received the payment, but we'd not yet earned or deserved the income. Earned or deserved the income. For example, we may have received rent for a whole 12 months, but we've only provided the office space or the vehicle or whatever it is that is being rented from us as the entity for a shorter period. So what we owe the person that we've received money from, remember the other party has already paid us, we've already received their money, but we have not yet deserved it, we've not yet provided the services or the products to them. So in this case, services or products, in this case, it's not going to be owed to the entity, it's being owed by the entity to the other party. So it's owed by the entity to the other party. Good. Then if we look at, so this one, prepaid expenses, this one is going to be an asset. The reason for that is services and products are owed to the entity. So if something is owed to the entity, the business owns something, and that is going to be an asset. Incomes received in advance. Because services and products are owed by the entity, that's going to be a liability. And then the last two, just quickly, let's first look at accrued expenses. What happened here was we've actually already incurred the expense. It's the opposite here. We've incurred or used the expense, but we have not yet paid for it. So you can see it's the exact opposite of the prepaid expense. And therefore, because we've already used, for example, the example we had was water and electricity, we've already used that, but we've not yet paid that, we owe money. Money is owed by the entity to another party. Okay. And if we owe something, we know that that is going to be a liability. There we go. So this account will be credited, and then we get to our last adjustment, which is our accrued incomes. And accrued incomes, we said, was when we actually earned or deserved an income. So we've done something to earn it. For example, we put our money in the bank and it earns income, earn or deserve the income, but we've not yet received it. And because of that, money is owed, this time to the entity, and that is going to be an asset. If something is owed to the entity, that needs to be recorded as an asset. So hopefully that helps you. Just to quickly summarize the four adjustments that we had.